Right, so if you want trading to be your full-time career, you need to become very good at handling losses. Generally, this is a challenge for many people. The reason is, if you've chosen trading as your path in life, it's likely you're not an average person. You're probably someone who's highly competitive, very ambitious, with high self-esteem and self-confidence, and you're probably very intelligent as well. These qualities, by the way, are wonderful in life, and they probably serve us very well in a workplace, in a 9 to 5 career, or even at school or university. However, when it comes to trading, these things actually work directly against us. This is such a big problem because traders are generally not used to dealing with losses, but the reality is that as a trader, you have to understand loss as a concept. It's part of a game. I often say that, in fact, these losses themselves are the costs of our business. So, just as you prepare for a business venture, you factor these in advance into your business plan. In the same way, they are included in your back tests, your strategy, and so on. So, there's no such thing as avoiding losses. What we need to do is to be very strong in managing losses. I'm sure this is a situation you've encountered yourself, because I have many times as well. I've encountered this situation myself during my trading career, where I went through a losing streak and didn't know what to do. So I found myself in a position where I suffered 4 or 5 losses in a row, maybe even within a single day, and it really got on my nerves. I reacted overly sensitively. I didn't understand why I was experiencing these losses, and when we have to realize that losses are part of the game, so they are built in. And this is something that's so obvious, yet it's hard to truly recognize when we're in the middle of a losing streak that our emotions come to the fore and those questions and doubts arise. Does trading actually work, or is it just a facade? Is it a game being played with us? Are we the cows being milked by the big players who live off the little pile of money we've scraped together? Or does my strategy even work at all? Am I competent enough to be a trader? And this is usually the point where things tend to take a much, much worse turn, where it's not just a few losses we suffer, but an actual losing streak sets in. Now, in these moments, emotions run so high that you start to overanalyze your positions. You begin to question your strategy, or greed rears its head and you keep increasing your positions. I don't need to introduce the feeling of FOMO either, when every position you basically want to be in every position. You want to stay in everything. And this will lead you to take on positions you really shouldn't. You start acting out of fear, you start acting on emotion, and you begin to react to a situation you shouldn't even be responding to, instead of reacting objectively to a trading situation. Meanwhile, a message has popped up. Right, let's just close that. So, as I was saying, your emotions start to take control of your entire trading instead of you reacting objectively to what's happening right in front of your eyes. So, in this conversation, I'm going to give you 3 practical tips on how I've dealt with these situations when they've come up. When we're watching the market, we really shouldn't be in such a heightened state. We shouldn't be acting based on emotion. We shouldn't be feeling tension when we're in a completely calm state. Basically, we need to remain static but not 100% devoid of emotion. We need to be alert, aware of any potential dangers that might arise from the market, and we need to know exactly what we're doing at any given time. For example, we should be aware of when the major American news releases are coming out that day, and whether we act before, after, or in the worst case scenario, but during, we need to react to what's happening on the market at that moment. If we have a position, we respond to that. If we don't have a position yet, then we react by making sure, if possible, to hold off just a few minutes before the big news comes out. But that's just one example. We need to take into account and observe our feelings instead of panicking and reacting impulsively to a trading situation. Essentially, the lesson here is that when a situation occurs, and let's say you lose on the market, You then need to recover quickly from these loss situations. You mustn't carry the emotions stemming from the loss, nor the burden of the trauma that comes with losing. We need to recover quickly. That could be the key phrase. And we need to stimulate our brain to return to a basic normal state. Now, if for you, say 15 or 20 minutes isn't enough for this, half an hour, and let's say, since you know yourself you need more time for this, perhaps a whole day, then you should get up from the computer, step away, and put the whole thing aside. Once you've returned to your normal state, that's when you can sit back down in front of the market and start taking actions on the chart again. When I was in a losing streak, I felt it was inevitable to make certain emotional decisions, and I'm sure you also know these emotional decisions well. Identify with them. And these have happened to you as well when, let's say, your account was in the red and you were counting your losses. The first reaction was that I must immediately recover that loss. So I don't even need more money today. Just please let me make back the loss I made this morning. Just let me earn back exactly what I lost. I don't need any more, honestly. And how did I do this? I saw opportunities, strategic elements, and signals, even where there weren't any. So there's a certain sense of urgency that comes over us. Not only do we feel that we have to recover our losses, but we also increase the risk. Because this is where the urgency comes in. I don't want to get back what I lost this morning tomorrow, or the day after, or next week. I want it back now, immediately. And how can I do this? Well, by increasing the risk, because then I'll be back in profit even faster. I'll get back to where I started the day even quicker. There's nothing behind this except that essentially we manage our position on a percentage basis. And when we lose, say 20%, which of course we'd never imagine happening, but in the past I've had such examples myself, then if we want to win it back, we don't actually need to gain back 20%, the same amount we lost, because to jump from 80 back up to 100, you actually need 25%, not 20%. It's just simple maths. So we have to recover even more in that case. Of course, assuming the money management is sound. For example, we usually risk 1% per trade. This is on a live account, and I'm not talking about prop firms here, where we generally risk only a fraction of that. But now, let's say we're in a 5% drawdown. Naturally, we all feel like, right, let me just increase my risk. Or say, I spot a good setup, let me double up, increase my risk. And you realize that the more you increase your risk, especially during a losing streak, and you're not in the same clear mental state as when you started, the more and more losses you'll suffer. And those losses will just get bigger and bigger because you're trying to double, triple, or go all in. And this is when I really ended up in one of those downward spirals in my trading career, where I suffered so many losses that it actually hurt my account. And of course, it hurt me as well. And then, because of how those losses made me feel, I ended up taking even more losses. But I also added to those losing positions, so my equity curve became exponentially negative. But in the end, I just didn't care anymore, since there was hardly anything left on it. Or, oh, a dollar, and then comes the margin call. Of course, the whole account goes. And not only do we get a spiral based on risk management, we start to question ourselves. So, this is where the psychology comes in as well. And I was the one who thought it didn't matter. And for a few weeks or months, I was profitable. And it was just luck these past few weeks. I start to believe that all of this was just luck. And I just had a good run. It was all just a coincidence. Did my strategy even work at all? Was I just in a lucky period with my strategy? And maybe for the rest of the year, it's actually a losing strategy. I start to question the people I've seen in the industry, those I watched on YouTube, those I followed on Instagram or later on Facebook or wherever I saw them. And I say, there aren't any successful traders. It's all just marketing talk. And they're simply trying to flog us these daft courses to sell them to us. They're selling a lifestyle. Everyone's selling signal services or broker recommendations. And I started to question the whole industry as it is. I started to question my strategy. I started to question myself, thinking, I'm not good enough. I'm not cut out for this. This isn't my path. All sorts of doubts crept into my mind. And on top of that, I realized I was overanalyzing. I was spending too much time in the market, overcomplicating things, and I was draining a lot of extra focus from myself. And that no, no, this is not that setup. No, this is not that setup either. No, this is not that setup. And I lost faith in my own strategy. And it's simply not that I entered the same way I did before. And it was, let's say, daily. Python trade, but sometimes it was just and even that was bad. So that really took a toll on my psychology. No, I can't do this. I can't enter here. This isn't good enough. After I got out of the gambling phase, which was just that positions, well, then I ended up in a very restrained state where I told myself, okay, I have to wait for the perfect setup. Okay, I've got the perfect setup. And you realize that this is an absolutely terrifying state. You're scared because you could lose your hard earned money or account again. And what happens? The perfect setup is right in front of you. The seconds are ticking by. You know you should enter, and you don't. And that position would have been good. And you end up in such a conservative and restrained situation that the parts of your strategy, the parts of your plan that should have brought your account back into profit, you end up not taking those positions because you're too afraid of losing. And there's too much doubt in your mind, both about your strategy and about yourself. So, what happens is you start taking losses you shouldn't, and those profits that you should have you don't take them because you still need to make up for those losses. So you keep holding on to those profits for even longer. You keep moving the take profit further since your well-defined strategic exits are no longer working as they should. And the money you would take out of it isn't enough to cover the losses anyway. All these positions are missed since the take profit won't be reached as it was set too far away. That's why it will go back to break even and what you've earned is zero, regardless of the fact that you've made nothing. And on this, those losses that happened in the past, maybe today or yesterday or the day before, they remain there and your account just keeps hanging in the negative. Of course, once again, you can see that these positions would have been profitable if you had closed them where your strategy says, say at 4R or 5R, and you don't wait for multiple times your money perhaps. For it to reach a multiple TP, you start beating yourself up again about why you didn't close it. That this is a double-edged sword now, where you are. Your losses are increasing and your profits are decreasing. Because there's the other side as well. Since out of fear, you close even earlier. It's not just that you close your positions earlier out of fear, because what happened before? You let them run and they didn't go that far. Now what you're doing is, oh my God, I just want to have positive days on the market or positive trades, and you close them much earlier than what's actually what will you end up in? A complete mental block. Neither this is good nor that is good. You no longer know what's right and what's wrong. By the way, this is just my own personal experience. At times like this, you need to go and rest, go on holiday, switch off, get far away from the computer because you've overdone it. Just like you can overwork a car or a machine, now you need to stop, calm yourself back down to your base state, and return to your original strategy. And that this is a situation many of us have already encountered. And I see, I see. So, how can we counterbalance this? And what's the best way to equip ourselves to ensure we don't end up in such a situation or spiral during our trading careers? Well, the first thing we need to recognize is that losses must be factored in as part of the costs, like in any business, as I mentioned earlier. If you've seen the case, of my performance, then you'll realize that in the long run, my profit ratio is actually between percent. Now, what this means is that I'm guaranteed to incur losses from trading. So I mentally prepare myself in advance that there will be losses here. And when these losses do occur, I will be ready to accept them. Now, I don't know how these losses will come about, whether, for example, there will be a win, win, loss, win, loss. That's how it will be. Or perhaps it will go loss, 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 win, and then another loss. So I don't know what the ratios will be, but I prepare myself for it. Since I have back tested my strategy, I have forward tested the strategy, I know what to expect, what the maximum could be, and there is always the chance that it won't. Or losses follow one another, or or but overall, for me, I need to look at how many losing or winning trades I had during a trade, but rather I need to look at or during a trade what my statistics are. We don't know in what order these will come, win, and the loss in our performance. Because the truth is that the distribution of profits and losses in the market is completely random. Market conditions determine how profits and losses occur, and all we need to do is stick to our plan. Indeed, it is necessary that we add a plan. That's why we're in the market. So when we go through a period of 5 consecutive losses and we know that we're sticking to our plan, we haven't made any irrational decisions, we haven't deviated from our strategy, that's the very process we set out in our previous normal state, our mental state, which was a considered rational decision, back tested and supported. But if we know we're making the right decisions, and we suffer losses one after another, then there's no reason for us to spiral mentally because we know that this was factored in. It was calculated that this could happen. It was part of the plan. And in life, actually, there are very few things where we should maintain this kind of mentality. Because the truth is, if you fail an exam and realize that you didn't study enough, you didn't practice, and you didn't prepare enough for that exam, then you conclude that if you keep failing job interviews, it's because you weren't well enough prepared as a candidate. And so you realize that after these failures, you need to improve and prepare better. In trading, for young women and men with high self esteem, confidence, and ambition who have chosen an unconventional path in life, we must recognize that when we suffer a loss, we absolutely don't need to do anything because it was already factored in. It's included in our strategy. It's part of our plan. Now, this is the stage or process after you've already developed a strategy, built it up, and proven that it works and is profitable in the market, supported by backtesting. This is the process itself. But if this necessary, thorough strategic preparation has taken place and we still suffer more losses, then our reaction should be nothing else. We need to remain calm and attentive, not emotionally driven. I've checked it out. We need to be human. We don't need to carry the burden of loss. Instead, we should recover quickly and continue executing according to our plan. The mistake that many people make is that they deviate from the plan, start making slightly riskier trades, but hope that they will win. This is the wrong approach. No one actually enters the market thinking that they are going to lose. So if you realize that whenever you enter the market, you're hopeful, that is a greedy state. Your discipline is being tested and you've already reduced your confluence because you think, all right, this trade seems like a good buy or it'll be a short. It's not a 5-star perfect setup, but it looks good enough. So you decide to jump in. And if you jump in with a larger position size, that's when you start showing the same symptoms as a gambler. And in fact, you're continuing or just starting their addictive behavior. You need to notice this and order yourself to stop because if you let yourself do it a few times, you're already starting to introduce a gambler's mentality into a professional environment where every entry and exit is based on statistics, analytical thinking, data, and strategy. So it shouldn't even be an option to just glance at something and say, man, the setup isn't great, but it looks all right. I feel like getting in. And as soon as a bit of that gambler's mentality slips in, it becomes a vicious circle. It's a slippery slope that could even be your downfall. So, a few things you can do when you enter a losing streak and you feel these emotions and you feel the weight of your losses is something I actually do sometimes. I switch to another account. Yes, I do have several accounts. I keep a smaller account specifically for these kinds of periods, so I don't just have one large account. So when I know I'm going through a losing phase and my mind isn't fully present, I switch to a smaller account, which I keep for the purpose of taking on less risk. And I only take on higher quality trades in order to regain my confidence. And this is just a temporary period when I know that my psychological state isn't right. But I also know that as soon as my mindset is back to normal and I no longer feel that my losses are mistakes and start burying myself, but instead recognize that these losses are simply part of the statistics, that's when I know I can continue trading, just as before, with the same risk management. And perhaps I might use another account, which is for so-called A plus setups, so for the top-notch trades, and I can regain my self-confidence because I know that whatever happens, losses will come. Right, right, that's how it is. And that's why instead of being on a main account where I might be taking on slightly bigger risks and end up in a losing streak, instead rather than losing larger amounts continuously on the big account, or perhaps even blowing it up, I'd rather switch to the smaller account, which is more restrained, more conservative, where I take on less risk so I can regain my confidence and my mental state. Now, something very common that I encountered during my trading career was that when I went through a losing period, I started to question everything. And this includes questioning myself as well. As soon as I went through a losing period, I started searching for new things about trading on YouTube, began researching more online, started watching other mentors, and began watching Instagram videos about trading education, hoping to find some way to solve my losses. And I realized that although I was learning more things, and those things might even be valid in the market, so I wasn't worse off for it, and I might actually be learning good things, I was on my own. I simply couldn't implement these trading strategies into my own account or into my usual routine because now, perhaps, I'm in a more restrained state as we have to wait for more confluences. Now, just as an aside, this is a strange word. Confluence actually comes from the English word confluence, which refers to a kind of coming together that we tend to use in trading, meaning that the more confluences line up, the better the setup. These new things I learnt completely unsettled me. They totally disrupted the strategy I'd been using up until then. Perhaps that's the best word for it. And I started adding extra confirmations from these new things. As a result, I didn't take as many trades as I used to, and the frequency of my whole day changed completely. Because of this, the winning trades I would have normally taken, I didn't, since I was waiting for the miracle signal from these extra external confirmations, or sometimes from myself. I started to doubt myself and I said, all right, I don't know it well enough. And I didn't take the same trades I would have taken before, which would also have been winners. Or I didn't take them because I doubted my strategy, especially when the loss was tied to emotions. And you feel it in your account, you feel it in your chest. It's completely normal to question everything. It's completely normal to seek information because that's always what you do. If we fail an exam, we start learning more information in order to make sure we don't fail again. But if you've developed a strategy and you know you've tested it over 1,000 trades, you have at least 6 months of statistics on it, and you know you're profitable, you know that the best thing you can do is not to deviate from your plan and not to introduce new things into your strategy, which could have either a positive or negative effect on your account. In fact, if you want to improve your strategy by adding more information, you need to test it in isolation as an A and B split test with controlled variables and one modified variable to see its effect on your trading performance. Of course, you do this on different accounts as well, in isolation, separately. But to experiment on the markets and randomly introduce things during a week you've chosen, completely at random. That's not a professional approach. In fact, that's once again introducing a gambler's mentality. It's done in a more professional manner, because you think you're doing the right thing by adding more strategies to your existing system, but it's still a gambler's mentality. What I actually found very interesting is that smarter, more intelligent people who do well in life, who perform well, in schools, at universities, they're not always the people who become the best traders, because when you have high intelligence, you usually have a high ego as well, which is an advantage in life. But in the trading game, it actually works against you. And here, at this level, you need to be in a state 110% of the time where you can control your emotions, your mind, and in my opinion, the best trader is the one who is actually able to properly control your emotions and your mind. What you come to realize is that trading isn't about having a better strategy. Sometimes it's simply about having a better mind and being in a calm, restrained, stable, and mentally focused state. One last thought I'd like to share is that back in my earlier days, in my trading career, now we're talking about the years around 2008, I very curious individual and I questioned everything. That's probably the reason why I first got into trading. I actually started trading back then because I saw the lifestyle in films, TV series, and a couple of YouTube videos. I couldn't see everything, thank goodness, unlike young people today, because what's going on nowadays is just so much and far too much. Back then, there was no Instagram. Facebook was perhaps just starting to spread its wings, was in its declining days, but even then, this kind of showing off wasn't really typical. Unlike today's world, where everyone drives a Lamborghini, everyone stays in luxury hotels, and people just throw money around. Trading was about something completely different. At least what was shown to us back then came across very differently. But when I started to research the markets, it was like a puzzle I had to solve. And this curiosity, this trading, within me to find answers, to build a strategy, to learn more and more about the market. It was this curious mind that drove me forward, not to mention the desire to prove myself, to be the one who did it first. I didn't know anyone in my circles who had managed it. And you find that you become more and more mature as an investor, as a trader, and this curiosity doesn't always serve you best. Now, listen up. Because just a moment ago, I said that this is what drove me forward. Because when something is part of the plan, when it's factored in, then our curiosity is awakened. And we want to look for, okay, it was built into the plan, but why did we lose? Why? Did I do something wrong? How could I do it differently, better? What should I change? Is the whole strategy rubbish? So is all my work really? Let's look at another one. And this curiosity, which is in all of us, it's definitely in me as well, or in you too, it's something I have to learn to control because I knew that after I'd been trading for years, I had loads of data, loads of statistics, and I'd put in thousands of hours. I'd built up a high market IQ, developed strong market instincts, accumulated a wealth of market experience, and I had developed a strategy. I had an edge over others, proven by data. So I had everything I needed, and I had spent enough time in the market to start understanding my own psychology. So now, whenever I went through a losing streak, my curiosity and psychology always brought me back to the basics I had learned in life. If I suffer a loss, let me learn why it happened. Let me do something about it. But in trading, it's completely different. You have to realize that I have to remain calm and alert. I must let go of the weight of the loss and its mental drag because everything that happens is already accounted for as I have done the necessary preparation. Here, I'm also referring to proper back testing and forward testing. Now, when you hear this advice, and let's say you hear it from me, someone whose word you might actually value, it's normal to want to put it into practice straight away. But you need to notice one key thing, and that is whether you're actually in the right position to start working on developing your psychology. Are you really at that stage yet? Because many people say that psychology, as in psychology itself, makes up 90% of trading. And perhaps there's some truth in that. I wouldn't say so myself. This is just my opinion. I wouldn't say it's 90%. I'd say more like 40 or 30%. But it's not really about which figure it is, more or less, or depending on who you ask. It's more the case that these are the steps. Psychology is at least as important as technical analysis. But first, you need a solid technical foundation, a strategy backed by technical analysis, before you even start developing your psychology. So, if you have a secure plan, you've proven that you have a trading edge over others. And here, you don't need to think about everyone in the market. Here, you mainly need to think about the masses and retail traders. You've proven it. You know that you have statistics and traceability to prove it. Now, the situation is that I have a strategy, you have an edge. So now I need to learn how to follow this edge. Because the fact that two moving averages cross and I hit a short, that's not an edge. If the chart draws a double top or a double bottom, that's still not an edge. With these, you're just lining up with the rest of the sheep. So first, you need to build a solid strategy and only then focus on psychology. Only then should you start working on your psychology. So don't try to skip ahead to that stage where you don't even know if you have a real strategy and you start working on your psychology and behaving in a focused, almost alpha mode. You're not interested in anyone or any perspective. You don't learn from why you're lost, and you don't try to fix these things because you already know, you're already good, and you're only focused on your psychology and you're out there in the market. But in the meantime, let's face the facts, the strategy isn't ready yet. These are the decisions you make when you prove to yourself that you have a winning strategy. If you haven't done this work yet, stay constantly curious. Question everything, examine your losses, and maintain that investigative phase you've entered. That curiosity, that feeling that you have to solve the market. Because, as I said, it's like a puzzle. I have to solve this jigsaw puzzle. Let this fire be your passion. This passion will get you through these tough times. But you must realize that this will only take you so far in your career, and it is necessary for you to build and develop your own strategy. Once you've done this, let go of that fire. Well, not completely, but let it smolder a little. Let go of the feeling, let go of the curiosity, because it has served its purpose up to now. But as the saying goes, what has brought you this far won't necessarily take you any further. So once you've reached this stage in your career and have a well-developed professional strategy, let go of the emotions. Stay calm, stay alert, remain in a peaceful state. From now on, it's no longer about being the most intelligent person for everyone. From now on, it's about who is able to follow their own plan, their own strategy, in the most effective and loyal way. And this is a very important statement. So these are the most important lessons I learned when I faced or was facing a losing streak at different stages of my trading career. It could have been after 2 years, 4 years, or 5 years, and about how we can best manage losses. But this advice on its own is not useful. What I would like you to do is to watch and listen back to our earlier conversation to see to what level you need to take your analysis, to what level you need to build your strategy before you start implementing the tips you've learned here. So watch that video and I'll see you next time.
Yeah, all right. Thank you.
Fight you!